assets. Today, we have a presenter who will be leading this conversation. His name is Ayo. Ayo is a Certified Financial Education Instructor and founder of OGF LLC. OGF LLC is an organization that helps individuals, families, and couples reach their financial goal. The company takes an unprecedented approach to creating a customizable plan to help each client to reach their financial potential. At the age of 25, Ayo was able to secure a multi-family house in New Jersey and is currently working on building over investment ventures. Ayo has his MBA and is currently in cybersecurity and senior IT consultant at Probity Inc. Thank you so much, Ayo, for having us. Please begin.
Just want to make sure you guys all can see my screen. Bear with me. All right. Can you guys see my screen?
Yes.
Okay. We can.
All right. So thank you for everyone who joined the call. Like they said, my name is Ayoola Ogunwale, and I'm a certified financial literacy educator. So today we're going to talk about a step-by-step guide on how to buy a house. The process is actually the same if anyone is actually interested in buying a condo. Just a little bit of background about me. I've been searching for a house for almost 2 years, and I learned a lot during those 2 years that helped me in my current stage right now. And I've been able to help others and friends get to help them achieve their goals, which is, eventually buying a house. So let's get into the presentation. So first, I'm going to give you guys a brief agenda. Please know that this presentation is typically 30 minutes to 45 because of the limited time frame we have for today, because I want to give you guys time to ask questions. I'm going to give you guys a short version of the presentation. If you guys have any questions, please ask. So first, we're going to talk about the different stages of the house buying process. So first is the mortgage agreement. This is when you give in a contract and your contract get accepted. Second, we're going to go to attorney review. This is when you and your attorney go over certain dates within a contract. Inspection contingency. This is the area within the house buying process. You get to do your own due diligence on buying a house. Anything that started is very, very important. And if something is really, really important, I think you should know it. I will repeat it twice. Other thing is the appraisal contingency. That part is also a huge part of the house buying process. Then we're going to get into mortgage insurance, title, and then closing. All right. So the first piece is the mortgage agreement. So this is when you already found a realtor, and the realtor showed you, gave you a private tour of the house, and you really, really liked the house, and then now you want to make an offer. The first thing you should be aware of when you're going to give an offer is that you need a pre-approval. So you need to go to a bank. They're going to ask you for a bunch of documentation that you need, which is, stipends, taxes, your 401k, everything. And then they're going to give you a pre-approval. A pre-approval is is pretty much a loan amount the bank estimate that they can give you based on the documents that you provide. So with your pre-approval, when you're given a contract, you need that pre-approval submitted with your mortgage agreement. Typically a mortgage agreement is it's about 20 to 45 pages, but your realtor should walk you through that. A lot of people always talk about, what is a strong offer? If you have an experienced realtor, he will walk you through that process. Another thing I want you guys to know is during the mortgage agreement process, the realtor company, they usually have this system that helps them look at comps. So comps is a comparison system that looks at houses that's identical to yours that sold within the past 6 months. So this system, they use it to get an estimate of how much the house would be worth. So your realtor is in charge of this. He should give you comps, so comparisons. So if you're If you're about to give an offer and your realtor just tell you to use this number, don't do it. Ask him for comps. You want to see houses just like yours that have the same amount of bedrooms, same amount of bathrooms, etc. And he will look at houses in the past 6 months or in a year that actually passed. Another thing I would like people to know is that for everyone to be careful, because some LLCs here are flippers and their only target is meeting, their revenue stream. So please keep that in mind. If you have a strict budget, stick to it. After this contract, this is the beginning of the house buying process. So again, you give me a contract, you have a pre-approval, and now let's just say your contract gets accepted, then we move on to the next stage, which is attorney review. This part is huge within the house buying process. So within the attorney review period, your attorney and the seller's attorney are going back and forth and making and deciding on dates. So within this attorney review section, you guys talk about when a mortgage commitment is due. So a mortgage commitment is when the bank gives you a letter and say, hey, we're able to give this person a loan. So during the attorney review, they're going to give you a deadline in which you must have a mortgage commitment. Within the attorney review, they're also going to give you a time frame in which you can do inspection. So how long can you, inspect the house and make sure that it's working, the house doesn't have any damages. So the dates are very, very important. I would recommend for you to write it down when you get to this stage. Within this stage, you can also ask for certain appliances. Within New Jersey, I know that a flipper or a seller is only mandated to give one appliance, a fridge or a stove. In New York, you're required to have both. I know some people are in Connecticut or other places around the United States. So please keep that in mind during the house buying process. During this attorney review process, a down payment is going to be required. So that's if you're doing an FHA conventional. The down payment, typically your attorney can hold on to it, but please note that the seller's attorney can also ask to hold on to your down payment. If you have a good attorney, you should be fine. Please make sure you get a good and knowledgeable attorney that knows exactly the laws and regulations around the city, the state, so he or she can help you throughout the process, and you won't be liable to pay any fees or liens on the property. Now we're going to move to the third part of the house buying process. This is the inspection contingency. This is probably, I think, the most important part of the house buying process, one of the most important part. During the inspection phase, you have 5 to 7 days to inspect the house. So you would need a home inspector. To find a home inspector, I recommend people going online and finding, look at reviews, maybe ask around, ask friends. The home inspector is going to evaluate everything within the property, from the roof all the way down to the basement. They're going to take pictures. They're going to tell you everything that they find. Please note that you cannot ask for, I've noticed a lot of my clients get frustrated with this. You cannot ask for a appliance to be replaced even if it look old. So for example, if you have a roof and your inspector tells you the roof is near its useful life, but the roof is intact, there's no leaks, you cannot ask for the seller to replace it. Even if you have an old boiler that was in 1963, if it's working correctly, you cannot ask the seller to fix it. So it doesn't matter if it's near its useful life. Another thing to keep in mind is that the seller actually doesn't even need to accept all your inspection requests. So typically the inspector would give you a report and he would tell you everything that's wrong within the property. And then you would tell the seller, I want you to fix this, this, and this. The seller doesn't have to fix any of the requests that you give them. They can easily deny it, that they're not bound to it. So please keep that in mind, that you don't have a long list. You don't have a list like 10, 20. No house is perfect. You're just gonna have to pick and choose your poison. The oil tanks is hard to explain. So I want somebody to, it's going to take time. So I want somebody to ask me that after the presentation. After the inspection contingency, so we have the mortgage contract, right? The mortgage agreement. Then you move into attorney review where the dates are set, and you can ask for appliances and stuff like that. Then we have the inspection phase, where you get to inspect the property yourself. And then after this phase is the appraisal. If you don't remember anything within this presentation, please remember the appraisal contingency. So typically the bank that you're borrowing from sends a appraiser, a person, a professional to evaluate the price of the property. So for example, if your contract price was $200,000 and the appraiser that the bank sent says this house is only worth 150, the bank is only going to give you 150. Because of this section right here, a lot of contracts get, terminated. So please be careful. Make sure that you're getting the right realtor to help you choose the right price. So typically these appraisers that evaluate the property of the house, they send them to the house, they look at the property, and then you go back and then do the same thing your realtor was supposed to do, which is they look at comps. So they look at houses within your property within the past 6 months, within a year that actually sold. So if you have a good realtor that actually did the right comps on your property, the appraisal section should not be an issue. Again, please note that if your purchase price was $200,000 and the appraisal came in at 150, it's either you guys have to cancel the contract, the seller has to decrease the price by 50K, or you have to come out of pocket. Typically after the appraisal contingency, a mortgage commitment is needed. I would say within like a week or 2 weeks after that. So please keep that in mind. All the dates should be within the attorney review. And like I was said, this is the most important part because again, you want to be careful with the price that you're throwing out there within the contract, because if it doesn't appraise, it could lead to a whole bunch of issues. The next stage is mortgage insurance. So typically after the inspection, attorney review, and appraisal, it's fairly easy from here. All you need is your mortgage insurance. So you would shop around Geico, Progressive, State Farm, find the best insurance for you. Please note that if you want a property near water, near beach, you will be liable for flood zone. So flood insurance, excuse me. So flood insurance is different from regular insurance. This is for any house that's near water and that could eventually get flooded through a storm and etc. So please keep that in mind if you want to be near to the beach or near water, that you will be liable to pay flood insurance. Again, shop around. Like you guys always hear on TV from Geico, if you bundle, you save money. So just make sure you're choosing the best option for yourself. After the stage is title. So like typical, like if you were in a car buying process, a title, which is like pretty much a deed of the house, is needed. Most banks would not close without this. This title piece is needed because this title piece tells them that they actually own the property. What you don't want is somebody, after you bought the property, somebody coming 2 to 3 years from now and saying that my grandmother owned this house. The title is very, very important. You also want to make sure there's no liens on the property. A title company will be needed. So even before you get to the house buying process, you would need a title company. Majority of the time, your realtor or your attorney can recommend one for you. But I recommend doing your research so you can save money on the title company. After this is easy closing. So after you got your mortgage agreement, the appraisal came in at the right number, and and you got your mortgage insurance, and you have the title was clear, now all you need to do is come to closing and bring a pen. Unfortunately, they will not let you do closing digital, and I know a lot of people are worried about that because Corona. Unfortunately, you have to go to your attorney's office and sign all the paperwork. I recommend people to do a final walkthrough. So, for example, if you ask for if you had inspection requests and you asked for things to be fixed, I recommend you ask for a receipt. Because if you don't have a receipt, there's no way you can prove that the seller actually fixed the property. Another thing is, before you close, I recommend doing a final walkthrough. So you visit the house one more time, make sure everything was fixed, look for any damages that wasn't there before, just make sure everything is good, because once you close, you're liable. So please schedule a final walkthrough before closing. All paperwork must be web signed. So what that means is you need to be physically there. You cannot sign electrically. You must sign in person. And during closing, you must bring your closing costs. So the closing costs include your attorney. Your attorney have to get paid. The title company has to get paid. The loan application, you have to pay some taxes beforehand. You have to pay some PMI if the type of loan that you have, FHA, conventional, is less than 20%. So please keep that in mind. The last thing I would like to say is, please note that the inspection and the appraisal section, you will have to pay for that upfront. So the inspector won't give you the report unless you pay him. And then the appraiser himself, the bank usually charge you for the application fee and the appraisal together at once. So after this, you're literally a homeowner, and the house is all yours. Like Doni said, this is what my organization do. We are Ogunwale Financial, OGF, and we educate individuals on, not only house buying, we also do how to invest. If some people are interested in forex trading, but most of our revenue come from doing an income analysis. So typically what we do is we analyze your income and your debt, then we see where you can actually save money. But we don't stop there. We also, from there, create a plan for you. After we find areas in which you can save, we create a plan for you to help you pay off certain loans, which is, if you have a credit card bill, loans, car loans, student loans, etc. We have some individuals here that's part of the African Business Group that we have helped. Doni, one of the founders, actually took on our service. So you can ask around, you can ask them, get a word of mouth from them. For anybody that's new to the African Business Group, please join. They share the knowledge. It's a free contact every Sunday. And it's just people like us every day just sharing knowledge to the community. So that's it for my presentations. Now I'll take any questions that anyone may have.
All right, thank you so much, Ayo. We really appreciate your time and your presentation. At this point now, we're going to start the Q&A session for this discussion. So please, if you have a question, please feel free to use the raise your hand feature, and we'll unmute your mic so you can ask your question to the speaker. So if you have any question, please use the raise your hand feature, and we'll just call on you to ask your question.
I see two questions within the chat.
Mm-hmm.
The first one is there any homework potential buyers should do before getting into the mortgage process? Also, how much money do I need to save to buy a house in New York City or the New Jersey area? So the first part to that question, there is. So I would recommend for you to set up a one-on-one consulting time with us. Our website is ogfllc.com. There is some things you need to prepare for, like, search out the potential areas that you want. Also finding a realtor, finding a bank, getting your pre-approval. There's a bunch of things that you need to do beforehand. If you want to list, I recommend just sign up with OGF LLC. We're actually offering a discount for everybody within the African Business Group. So any services in OGF LLC is 20% off. The code is ABG 2020 for anyone that's interested. The other question was how much money do I need to save to buy a house in NYC in New Jersey? That question, it varies because it depends on the amount of house you're trying to buy. So, and also depends on your loan type. So if you have an FHA, depending on the house you're looking at or the range, is typically 3.5%. But if you're doing conventional, it can range from 5 to 10 to 20%. Right now, conventional depends on the market. So please keep that in mind because a Corona, most banks are starting at 10% instead of 5. So it might require more down payment for a conventional. And there's a lot of factors that come into play too. You have I don't know. Well, I'm sorry. You have the market, and a lot of people say that right now the market is a seller's market. I'm being honest with you guys. I have a lot of clients that are struggling to get a house. So please don't believe what you hear it saying is a buyer's market. It's a lot of people out there that's trying to buy and flip. So just please be careful. The second question is, what is the typical amount for closing costs? What I tell people is 3.5%. So 3.5% of your loan. So if you have an FHA loan, the down payment is 3.5. I would recommend for you to have another 3.5% of that purchase home, and that should be enough to cover your closing costs.
Thank you so much, Aya, for answering this question. We have a question from Mr. Babalola, so I'm just going to unmute him so he could ask his question.
Thank you for the presentation. I recently been I live in the DMV area, DC, Maryland, Virginia area. It's similar to, sorry, I don't know if you're hearing this TV. It's similar to New York, high prices,
Yep.
Home prices, seller's market. And we try to get a condo, and we did basically everything you said. We have a really good realtor. Anyway, we missed out on few bids because of cash buyers.
Yep.
What is how can we, how do we become more competitive, right? Because there's a lot of, you could get house with no money down, little money down, but it seems like the people with the most cash are winning in this game in a little bit. So do you have any thoughts on that?
The same issue happened to me, honestly. I went through the same process. Like I told you, I was looking for a property for 2 years. So I understand, and that's why I try to tell people it's not a buyer's market right now. It's a seller's market, and the price is going up. One thing that I did that helped me is you need an incentive. So, for example, right, if you make $80,000 and there's somebody right next to you that also make $80,000, and you both are giving the same offer price because your realtor did the good job and he did the comparison and he said the house is worth this amount. You need incentives to get the realtor and the seller on your side. So what I've seen is that a lot of people put extra money out of pocket. So some people would say, I give it an offer for $150,000, but let's say the house appraised for $145,000, I'm willing to give an extra $5,000 out of pocket. Some people are not okay with that. Another thing that helped me, what I did is I used the seller's realtor. So typically in a house buying process, you have yours and then the seller has his. For me, my realtor really wasn't telling me the properties. I was telling him the properties I was interested in. So for me, I just went to the source itself. So I just started contacting the realtors of the properties that I liked. I reached out to him. I was like, hey, can you give me a tour? He said, yeah. And then I told him I really, really like this property. I told him I don't have a realtor. And then he worked with me. So he was both the realtor of me, of the buyer and the seller. And the incentive for him is that he gets double the commission. So he wanted to close. So that's another way you can look at it, right? It's like if you really, really like a property, which I knew I liked it, I was like, hey, I'm willing to work with you, blah, blah, blah. Another thing is that you can become a realtor yourself, right? And get licensed. But again, you're still going to need that incentive, right? For a seller or a realtor to want to choose your transaction. Please note that the realtor, some of them don't show the offers to the seller, not all. So like, for example, if they have another realtor that they work with and they want them to get the commission, sometimes some realtors don't give certain contracts, but hopefully, I hope that helped.
Yeah. At least I don't feel alone. Just save more money.
Yeah.
All right, thank you, Mr. Lawala, for that question. We have a question on the chat. This comes from Wale. He asked, "Is it the right time to refinance?"
Yes, because the interest rate is very, very low right now. Especially if you have an FHA loan, I do want to say this, that if you're going to get an FHA loan, typically in the past, if you had 20%, your PMI goes away. So PMI is pretty much insurance that they charge you when you put less than 20% down payment. So if you're going to do an FHA, or first-time home buyers loan, they're going to charge you PMI. If your down payment is less than 10%, that PMI, which is that fee, stays there for the life of the loan. So typically I tell people, once you reach 20%, once you reach, that 20, when you paid off 20% of your loan, that's why I recommend people to refinance. So you can refinance two ways. You can refinance and start your mortgage over. I do not recommend that. I recommend refinancing to the amount that you have. So for example, if you have an FHA loan and you paid off 20%, I recommend you refinancing from an FHA to a conventional loan. But yes, right now is the time to refinance. And please keep in mind, when you do refinance, you're also going to have closing costs, but a lot of companies are actually helping with that too. So.
All right, thank you so much, Ayo. Quick question that came in. When it comes to the first-time home buyer program, is that from the government, and how does somebody qualify for those kind of things?
Yep. So it's a first time is a federal housing authority, I believe, FHA, and is for first time home buyers. And typically the minimum down payment you need is 3.5%. And the minimum credit score is 560, I believe. So a lot of things come into play, because you need to make a certain amount of you need a certain amount of income to debt. So they're going to run your credit score and make sure you don't have too much debt. They're not going to give you a huge loan amount if they know that you can't pay it by yourself, and you might need tenants. So that's another thing to worry about, because not all tenants might play if you guys are looking for a multifamily property. But like I said, FHA is for home buyers. And if you want more information, we have, like I said, we also teach a home buying course, and it's more in depth than this. We had to shorten it because, we only have an hour for this presentation. But if you want a quick, if you want to talk to us at OGF LLC, we'll be more than happy to help you out. But again, for FHA, it's for first-time home buyers. Typically, everybody gets it. You just need a 560 credit score, and you need a good income to debt ratio. So.
Yeah, thank you so much for answering that question. Another question that we received early in the week was around for a first-time home buyer, should you buy a single family or multi-family home?
I think that depends on the person, honestly. Me personally, I bought a multifamily, but I think it depends on your situation in life. You know, some people, most multifamilies are, you know, especially in the East Coast, you know, a lot of houses are together. I know some people want some space, so they want a more suburban lifestyle. So I think it depends on the family and what exactly you want. But if you want an investment property that you know will eventually grow over time, and that can eventually give you revenue in the long run, I would say a multifamily, because the multifamily house can eventually pay itself, while it could pay its own mortgage while you go for another loan.
Yes, I know you mentioned that you want to talk about oil tanks.
Yep.
Can you just talk a little bit more on that, on oil tanks?
Yes. So oil tanks, so typically oil tanks, they're exactly like what they sound. So back in the days in the early 1900s or 1800s, they had tanks. Oil tanks was what powerhouses. So people didn't have, you know, the boilers. So these oil tanks are underneath the houses. So when you some home inspectors are not, don't have tank sweeps, so they won't be able to tell you that there's a tank, but these tanks usually have oil in them, and if the oil come out of these tanks and it becomes contaminated, you are going to be liable. So typically, to take out a tank, it costs from $4,000 to $10,000, and most flippers don't do it because it's expensive. So they won't tell you that there's an oil tank, and most flippers are just, you know, installing a new boiler and etc., and just leaving the oil tanks there. Another thing, like I said, if it gets contaminated, so if the oil tank leaks and it gets into the soil, you are liable, and that can cost from $1,000 to $1 million. So please be careful of oil tanks, because it costs you a lot of money, and especially even when you're trying to sell it, some people won't want it because of the oil tank. So.
All right, thank you so much for answering that question. Please, people on the call, if you have a question, you know, don't be shy. Please feel free to, you know, use your raise your hand feature, or also just type your question if you have a question for the speaker. Aya, can you also just talk about a little bit more on the taxes and, you know, the benefits of, you know, owning a home and some of the tax benefits you get?
Yep. So it's one thing I do want to talk about is a lot of people from New York City are trying to go to New Jersey. Please keep in mind, especially for New Jersey, New Jersey has the highest taxes in the United States. So please be careful. Typically when you search online and, you know, you're looking for a property and it's currently being flipped, 95% of the time, the taxes you see is before the house gets renovated. If a house gets renovated, the taxes are going to go up. If the house looked better than all the houses in the neighborhood, please know that your taxes are going to be high. So please just keep that in mind, because I know, you know, I have friends in Jersey that's paying up to $12,000 in taxes per year. So that's $1,000 a month on top of your mortgage. But but there's also some advantages, right? You could write off a lot of your taxes, and then on top of that, when it comes to tax season, they're also gonna, if you have a multifamily, they're also gonna ask you how much revenue you made on a property. But if you have a good, you know, tax person that you go to, you should be fine. They will give you all the shortcuts.
Yeah, so you have a question from Monica Boyd. I'm just gonna unmute her so she can ask a question.
Hi, thank you for the information.
No problem.
So I know buying a home is one of the biggest investments a lot of new homeowners will go into, and they may not consider built-in equity of that home. So what percent of built-in equity should new homeowners target when they're buying a home?
That's real tough. The built-in equity, I think first of all, when it comes to equity, location matters. So I know some people, typically, first-time home buyers, uh, you usually pay 3.5%, and when after you close, that's the equity you own on a home. But to be honest, I think if you're going to be in the New Jersey and New York area, the equity is going to constantly go up, because I can only speak for New York, but based on historical facts, New York and New Jersey, prices, if you own the house for 3 to 4 or 5 years, the equity is always going to go up. But I think that depends on you. I think you need to do the research on the area, make sure that this area in 4 or 5 years is going to grow. Or how did houses grow in that property, in the past 5 years, and you do your own research. A lot of people do want equity, especially when it's time to refinance and stuff. But another thing you can do within a property is you can fix up some things yourself, right? You can make your house stand out. You can create a backyard. You can put flowers, create a gate. Those little things increase the equity of your home. But I personally do not have a certain percentage. I think it depends on the person themselves. I hope I was able to answer your question, Monica.
Thank you.
All right, thank you. Thank you so much, Monica, for that question. And thank you, Ayo, for answering that question. I believe Mr. Adebayo has a contribution he wants to just add. So Mr. Adebayo, I just unmuted you. You could unmute yourself now.
Thank you. And thank you, Ogunwale, for the information. I think it's very valuable. I don't know if it's a question or just a contribution, because I kind of got my home or my house a few years ago, and one thing that stood out, because we had a very experienced realtor, she's probably been in the game for over 30 years, and we shopped for quite a few period of time, probably 6 months, and we were actually giving up because we were about to have a baby before the house showed up that we actually liked. And what happened was, because of how much of work we've put into it, what the realtor did was she literally asked us to, first of all, put in the application the very first day that we saw it. The moment it came up, we put in the application for it, but we also put in for the full asking price, the listing price.
Mm-hmm.
The reason why that's important is the guy that asked the first question, I think he said something about some guys with cash, taking over the house from people. So I don't know how that fits into the New York, Jersey area. I live in Texas. So I think that when you put in the full asking price like we did, and then after the inspection of the house, you could have a conversation with the other realtor or whoever the seller is. Say, hey, look at this stuff. There's wear and tear on this, stuff. Based on the inspection, maybe that you could have some kind of negotiation to get the price bidding down to what matches to the appraisal proper. So I just thought I would share that information. I don't know if it'll be helpful for folks around here. And if you have any feedback on that too, I'll be very happy to.
Oh no, that was very, very helpful. You're honestly right. During my experience, I actually offered over asking price. I have some people on this call who are, my clients, and they actually offered higher than the asking amount. So, like like I was saying earlier, it's a lot of buyers out there. So you have some people that's been saving their whole lives, and they really, really want a property. So if you have a good realtor and he's able to figure out the asking price, and the asking price is accurate, you're not going to be the only one that gives that asking price. So it might, from my experience, especially in the New York City area, because as you guys probably know, houses in New York City and New Jersey is constantly going up. What sellers are looking for is, you know, the best offer. But please keep that in mind. Please make sure that you're able to pay the loan amount and on the amount that you're offering. But to what he was saying, yes, asking price does help. But just make sure that your realtor is doing the comps and making sure that the house is worth them that amount. Because what you don't want to do is the appraisal comes in and the house is not worth that much. But thank you for sharing that. I really do appreciate it.
Yes, there's one more question from Ayadeji on the chat. He mentioned with COVID-19 causing loss of jobs all over the country, how do you recommend one screening potential tenants?
That is tough. I actually struggle with that because my property used to be an Airbnb. And right now, I'm not doing the Airbnb. So one thing you can ask is for them to get tested. You can put that as part of the application. You need the results that everybody in the family are clean. You know, you don't want, you want to make sure that everybody, you know, your family is safe, etc. You can add that to the application process when you're screening tenants. Some people might not like it, but at the same time, they will understand and respect it. So that's what I would recommend for you to do.
All right, thank you so much, I for answering that question. We had a question around, you know, I think you mentioned if you're gonna live next to the beach or next to the water, you gotta have flood insurance. But I think there might be other areas where you could be in a flood zone, but not necessarily living close to a body of water. Can you just talk a little bit more on that?
Yep. Yeah. You don't have to be near. You don't have to be near specifically like a beach. So typically in every state or borough, they usually have a map online, and you can see the flood zone areas. So typically you can check online yourself and figure out if the property that you're buying is in a flood zone. That means if it rains, you know, properties there is going to get flooded or et cetera. So the banks are going to require you to get a flood insurance, and flood insurance is usually high. And it's insurance on top of your typical mortgage insurance as well. So it could drive your monthly cost up. So please keep that in mind.
All right, thank you. And one of the things that came to mind is, like, I know you're dealing with a lot of different people and different walks of life. What are some of the challenges people are facing when it comes to, you know, either having the amount of money to purchase their home? What are some of the challenges, and what kind of advice do you give them to kind of overcome those challenges?
Be patient. And like I told you guys, I was there for 2 years. Be patient. If the house is yours, it's going to be yours. I lost over $9,000, you know, buying, you know, trying to get into contracts and get property. But I think the first thing, and you guys can schedule like a consultation with us, but we teach you everything you know before you get to those stages. Due to time, we wasn't able to share them because we wanted to give you guys, you know, time to ask questions. But there's certain things you should do beforehand, before the house buying process. But man, I'm sorry, I was reading the comment. But when it comes to, you know, house buying, you please just be patient. One thing I would say is, I know you guys are going to be spending your, you know, your hard-earned money on this process. Please note that you're going to pay for the inspection and the attorney review. So those two pieces, those two stages, you're going to pay for that out of pocket. Everything else you pay at closing. So for me, each time the appraisal costs $500, the inspection costs $500. So that was $1,000 each transaction, and I had 9 transactions, and it didn't work out each one. So each one I lost $1,000. So just be careful I would recommend for people to write down things that they want of the house, right? You might not be able to check off everything on your list, but just figure out, you know, stuff you want, stuff you need. Like, do you want parking? Do you want to be close to, you know, transportation? Do you want central air? Do you want a washer and dryer? You know, these little things you should tell your realtor, and he should be able to look for. But the best advice I could give is just be patient. The house buying process, you're going to need an incentive to get the seller and the realtor on your side, because it is a seller's market right now. It's not a buyer's market. So just, if you're able to save enough money, I would recommend give a little bit more towards closing costs if you can. But again, don't give more than you have, right? Because another thing they're gonna ask during your mortgage contract is reserves. So let's say you buy a house for $200,000 and you have $30,000 to close, and that is the amount you need. The bank is gonna ask you for reserves. So reserves are, you know, they wanna see that you have 1 or 2 months mortgage in your bank account, because they don't want you spending all your money on this house buying process. They want to make sure that you have, you know, 1 or 2 months in case you don't have tenants. So please also keep that in mind. Any other questions?
Yes, we have a question from Seke. I'm just gonna unmute her so she can ask a question. Hey Seke, we can't hear you.
Hello, can you hear me?
We can hear you now.
Okay. All right. So you talked about the flood insurance. Are there other required insurance for other parts of the country? For instance, where there's a tornado or where there's fire for Californians? You know, are those insurance coverage mandatory? That's my question.
So typically, depending on the area, the bank will tell you. The bank will require, based on the area you're at, to get certain type of insurance. Majority of the time, I would say like 90% is covered through the mortgage insurance. But if it's like a, you know, sticky situation where it's flood, you know, fires, you know, tornadoes, they will require you to get probably another type of insurance, or your insurance rate is just going to be higher. Your insurance payment is just going to be higher. So it's going to be one or the other. But your realtor and your lender will definitely inform you of the area you're buying. They should be there to guide you through that process. So I have another question that says, what are my thoughts on using HELOC to purchase a rental property? Well, first, to have a HELOC, you need a mortgage. So I think it's a great idea if somebody knows how to use it properly, because the way HELOC works is for every day they're charging you an interest. So typically some individuals put their own income there to decrease the price of the daily interest, and then use the HELOC to pay off debt. So pretty much the HELOC is their debit account. But it's all the ways that you can possibly use HELOC. But I do think HELOC, it is a great way to use rental property, because what you're using is your equity. And HELOCs can last up to 5 to 10 to 15 years. And they only check your credit score once, so it doesn't really affect your credit score that much after the first time you take it out.
Thank you so much, Ayo. Just a question, maybe some final questions here. Just another reminder, guys, if we're getting to the top of the hour, so if you have some final thoughts or final question, please use the raise your hand feature to ask your question. Question, I know you mentioned the term seller's market and buyer's market. Can you just elaborate more on the differences on those two terms?
Yeah. So buyer's market pretty much means that there's the market is in favor of buyers. So there's more options for buyers to buy houses. So like, for example, during the recession in 2008, that was a buyer's market because it was a housing crash. So any houses that was renovated, it wasn't that many buyers. It wasn't a lot of people looking to buy houses. So the individuals who was during that time had, good rates and also had better advantages. The seller's market means there's a lot of buyers right now looking to purchase homes. So it gives the sellers more choice and more options to choose. Now everybody would say, hey, because it's a because it's a Corona outside, it should still be a buyer's market. But it's so many people out there that's trying to flip, that's trying to own, that the housing market is still going up for the United States. So those are the two differences.
Yes, just one more question, Ayo. I know sometimes it's great, to own a home, but a lot of people, they don't know about, all the expenses that come after you buy your first home, right? So, can you just talk about, some of the expenses that people should be expecting, either the monthly basis, yearly basis, that, people should be expecting to pay out of pocket?
Yeah, so typically what I recommend is for everyone, like once you get a house, multifamily house, I recommend putting $100 to $200 away on a monthly basis for repairs. It might not sound like much, but if you're good for, you never know what exactly could happen, right? Every 10, 15 years, you're expected to change your roof. The roof is the most expensive thing in a house when it comes to repairs. It costs at least $8,000 and up for roofs. And if you're gonna have the property for 30 years, you're gonna at least change the roof at least one time. You're gonna have certain type of repairs, stove, oven, fridge, electrical, plumbing, things will come. So I recommend putting, $100 to $200 away. If you could do more, do more. But there are definitely going to be some expenses. Like for example, if you want to take out the garbage because you're the homeowner, you must provide garbage bags, for example. That might not seem like much, but it might be, $20, $30 every 2 or 3 months. So there's going to be expenses with it. But if you save and plan, you should be fine. I see a couple other questions. Somebody's asking me, what are the pros and cons for a new construction versus one that's already built? The first thing I can tell you about new construction is taxes. If your house is a new construction and the house right next to you has $5,000 in taxes and it was built in 19 something, your taxes is going to be higher because it's a new construction. The pros, of course, with new construction is that it has less things to worry about. Not a lot of things will need to be fixed if you have, the right person actually, buying the property. What I did is that I looked for a property that was built in the early 2000s. So it was still fairly new, but it's just not a new construction and my taxes wasn't that high. So you can find, relatively new houses. That's what I would recommend. But pretty much, I can't speak to all the pros and cons right now. We're at 6. I could stay on and answer some other questions, but if you guys have anything urgent or you guys want to schedule a consultation, OGF LLC.com is a 20% discount for everybody that's part of the African Business Group. The code is ABG 2020. It should be active as of today. Our team members are actually working on getting that code set up for you guys. But I can stay on to answer a couple more questions if needed.
Yes, thank you. There's a few more questions. I'm just going to ask them. Somebody asked, your solar asks, is a realtor needed to purchase a foreclosure or auction home?
No, it's not. It depends how you. Majority of the time, no. So you might need a a realtor to find a property, but if you have someone that can get you those deals, then you're fine. But please know that most foreclosure and auction homes, they prefer cash, and a lot of people that's going there have cash ready. So I think it's just making valuable relationships with people, but you don't necessarily need a realtor for those.
Yes, just one final question. I think this is a follow-up question for a person that asked about a new builds. For buying, for buying, building a house, will the land be the same process as buying a house itself?
Can you repeat that question?
Yes, I think I think she mentioned that. I think for building a house, will buying the land will be the same process as buying the house itself?
No, it's not the same process. The process with buying the land is fairly simple. It's less stages than the house buying process. You would need to go, meet the seller, form a contract. Of course, you're gonna need an attorney, and then you're probably gonna check title, make sure that there's no liens on the house or somebody coming, the next couple of years saying that they own the land, and then you just got to register it with the city. So it's less steps, but there's still some things you need to do, like title and stuff.
All right. I think that's it. I think one more person asked, is there an assignment sale in America? I'm not sure what an assignment sale is.
Yeah, somebody can speak on that and clarify?
Yeah, I can. If you want to unmute yourself and talk about assignment sale.
So, hi everyone. Assignment sale in Canada, basically what it means is you can buy a house on during pre-construction, like from a builder, and basically you can sell the house on paper before the house is done, and you can sell it to somebody else. They can take over after a couple of years maybe. So I just want to know if there's a similar concept in the States.
So wait, I'm just trying to make sure I understand. So you're buying a house that is currently being constructed, and then you later sell it to somebody else, or the person just sells it to you and you keep it while it's being built.
Doing, I'm not
Yeah.
sure if you want to close out the meeting. Like I had mentioned, he has a couple of codes that you could use to, if you want to use the services. I think we're going to share that with the membership, so you guys can take advantage of that code. So Dwayne, just want to close it out.
All right, Wale, thank you so much. Just a quick, I think what I can make, well, it's not similar thing we have here is it's called wholesaling. Wholesaling is pretty much you buy the property, but you just assign it to somebody else. So we call it wholesaling here. A lot of people that's a quick way to make money. You buy a house that needs to be fixed, then you buy it under like an assignment, then you assign to someone that's cash to buy that house with cash. And you make a deal with a person that you want to sell the house for $50,000, but you sell it to the cash buyer for like $55,000 or $60,000. So you make a quick $5,000-$10,000. So a lot of people actually make quick money from that. We will have a presentation coming up later on that. Actually, there's a guy. He's on. I know him. His name is Tosin. He lives in New Jersey. He's a big wholesaler, and he's gonna, he's making a lot of money from that. So we're gonna have him. I think we have him come in to present in December or November or December. So that should be a great topic. It's going to be like a whole new world for most people to see how you can actually make money from real estate with no credit check, with no down payment. But it takes a lot of work, and that I know about it. But without any further ado, I just want to say, Ayo, thank you so much for the presentation. For our last segment, I know our time is fast spent. For the last segment, we usually ask our speakers to give us a common sense finance tip. That's just, like they say, common sense is not so common. So it's something, a finance tip that you think should be common and that most people are not aware of or they are not doing. So I will have you go ahead with that.
What I will say is, I hear my echo. But the first thing I would say is for individuals to try to do a lot of family plans. A lot of companies reward families. So I could give an example for like, Apple Music. We pay $10 a month if you're just an individual. That's $120 a year a person will be paying. If you have a family plan, you get up to 6 people. And $15 is $15 for 12 months. So 15 times 12 is 180, but you have 6 people. You divide that by $30. I mean, you divide that by 6, that equals $30. So it would cost you $30 for the whole year to have Apple Music versus 120. So right there, you're saving $90. I do that with my family all the time. At the beginning of the year, I tell them to give me $35, include taxes, and I put in a reloadable debit card. And right there, I'm good for, I'm good with Spotify or Apple Music for the whole year. Another thing, will probably just use digital banks. I recommend to all my clients to use digital banks. They give better interest rates, especially in the savings account. I personally use Discover. There's no minimum for debit cards and savings. The only downside is is no physical location. It's an online bank, but they do give you options to a lot of ATMs that you can go to. So it gives you way more options than you're stuck with Bank of America. You only got to go to Bank of America. And then the last piece is buy in bulk, guys. Bulk save money. I have a friend who goes to Walmart and buy rice every 2 weeks. You go to a big wholesale store and buy 20 pounds of rice for like $30-$40, and that saves you for what, 6 months, depending on your family size, and rice and oil, all that stuff doesn't need to be refrigerated. So and if you have a deep freezer, that's even better. But buy in bulk, try to use a bunch of family plans. Another thing with the family plan, I have Verizon. I was paying $80. Now with my family, I'm paying $40, and it comes with Apple Music included, Disney Plus, was it ESPN, Hulu, all of that is included for $40, and I was paying $80 at first. So they reward you mostly for family. So try to get a lot of family plans, guys.
All right, thank you so much. And you all hear that family plan. I think my whole family share Netflix account. So, so that's great. Thanks for that. I definitely agree with that. So thanks everyone for joining us today. Thanks to everyone with the questions. Thanks, Ayos, for the wonderful presentation. We really appreciate everybody's time. Once again, this is African Business Club. Our goal is to normalize financial literacy, promote collaboration and networking among Africans. And the conversation doesn't have to end here. So please join us on Tuesdays. This coming Tuesday, September 8th, we will have something we call Talk to Us Tuesday. It's a continuation of this topic. Usually we extend it on Tuesday for a discussion. And if you have any question you can think of that you want to bring to the table on Tuesday, or if you have any contributions, just bring it. And we'll have, I is also part of our African Business Club members. It most likely will be there. And we have other people in there that are also real estate agents, mortgage brokers, or people with just experience. So please join us on Tuesday. It will be at 7 p.m. Eastern time. And also, please connect with us on Instagram. It's African Business Club 2020. We also have a Facebook group, also at African Business Club 2020. And our YouTube page, we will have this video will be uploaded on the YouTube page during the week. And we have other videos that have been uploaded, a lot of information, a lot of great topics that we've had in the past that, that will all help everybody to grow financially, because what we focus on is personal finance. And you'll find all these topics very helpful if you check out our YouTube page. And also our Discord app. So please join us on Discord app. If you haven't joined us, I'm gonna say you are missing out. I'm really sorry to say that, but we have a lot of like-minded people with great information, great networking, great experiences. Once again, our speaker Ayo is also one of our members. So you have access to all these like-minded people. You can ask questions. We collaborate every day. There's a lot of collaboration going on, a lot of information, ideas being shared on that Discord app. So please join us. Lastly, I would like to remind everybody we are all kings and queens. So please, let's treat each other as such. Let's respect one another. Let's love each other. Also, election is coming up. Please, everyone, let's vote. And I'm hoping everybody at this point is registered to vote. So please, let's our vote count. Let our voices be heard. With that said, thanks everybody for joining us. Peace and love. Thank you, guys.
Bye.
Thank you. Bye.
Bye.
All right, thank you.
Hi,
Thank you.
everyone. Have a good night.
Thank you. Enjoy your Labor Day.
Thank you. Thank you.
Enjoy your
Thank you.
holiday.
Different style with deliberate. I don't have the word prevalent. Different predicament. Every day a different problem. Different line from a government. Different politics. People with different qualities. Different feeling. Looking for a different healing. Read it with a different meaning. Different book. Come with a different look. Same stick, different book. Different different group, it's a different time, different things from my mind, different steps we are climb, while them connive, different egos collide, back full of different nine. Different we do, although we different, still we similar. Every man bleed blood, that's a big similarity. 7 billion show one cinema. One world we live in, and through social media become the new
I see you, James. Thanks, brother. Thank you.
And you just might find every man love them family. That is another familiarity to demonstrate the similarity. That doesn't mean there's not a big difference up in the quality of copy from the real original. Cause you don't know it's different. Different acts of belligerence with differently intelligent, different